Testing. What's up, what's up? How you doing, Sean? Wait for a few more people to pop in, if they're gonna. It's another weekend. It's another low price action, not much happening kind of weekend. Good morning, Boxer. How are you, mate? Only got a couple of people in at the moment. I'm in the voice chat in my YouTube as well. I mean, in my Discord channel. Let me put out a link for that. Join my free Discord. And then I'll grab a link. Create invite. There we go. Okay, I'm just gonna pin this to the top of the chat. What's up, Let's Mars? How you doing, mate? Oi, oi, oi. Turn this music down a little bit. It's better. All right, now. I think the last time I streamed was somewhere... Was it the 19th? Yeah, it was somewhere in the 19th. I think something about going long, either over here or something. And it stopped out. Got wiped out through the volatility, but that's okay. All good. We're still in that buy zone. Haven't left yet. It's been very boring through here, through this section. Just not a lot going on. Just teasing 30,000 a couple of times there. 3 times, triple top. And yep, still underwater. I'm doing well, thanks Mars. Hope you're doing well too. I think you and Static Scared Tame, he made his Discord free. Really? Oh, there you go. Did he really? I've been scalping this one. STMX. I'm not advocating jumping into it, but it's been on the move. It's up 25% in the last, during this daily candle, the Saturday candle. The Sunday candle is fast approaching. I'll just take all the indicators off just so we can look at it naturally. Here's the hourly chart. So you can see this thing's been trending for a number of days now, like it's been in an uptrend. Something I came across, just a very like random fun fact, just another way to interpret the RSI. Like it's the most basic thing. Let me show you what I mean. Wait for that to load in. Okay, so, oh wow, they've adapted the RSI again. They've got this like shaded area in the relative strength index. Anyway, the halfway point, as we all know, is the 50 on the RSI. I just want to get rid of this yellow line, it's a bit distracting. And we'll make this white so we can see it. And then the background dark. Make it black and opaque. There we go. I like that setting. And let me just adjust this. Sorry, 1 second. Upper band and lower band. The middle band can be a little lighter. Maybe something like that. And then we'll save that as the default. Okay. Yeah, I really like the way they've changed that. They've got like a shaded area for oversold and overbought. So the way that this person explained the RSI, I think it was even just in a YouTube comment, was that don't think of it as overbought and oversold, because then, you know, then you have the assumption that it's going to reverse. So all it is you see this 50 level, and then whenever price is above it, it's generally in an uptrend, and whenever price is below it, it's generally in a downtrend. Simple. Like that's all you have to know. So, and then everything else is, you know, a subset of that you know, that piece of data. So that piece of information. Okay, let's circle like right here. It's in an uptrend. You know, the RSI line is above 50, so we know it's in some kind of form of uptrend. And now how high it is above 50, that is just a measure on how strong the trend is at the time. That's all. Just because you get a dip, you know, like I want to find a different example here. Okay, so most of this we can consider an uptrend, right? Obviously there's varying degrees of strength of the trend. So yeah, let's find an example of what I'm about to say. Okay, so you can see here it was quite strong, like it was suggesting that the uptrend was strong and healthy, which was through here. And then the volatility happened, and then we got all this chop. Now, just because it fell down to here doesn't mean the trend was over just yet. You know, it still picked up here. And see, there were some dips below 50, but you get a lot of like, you know, jumping back into an uptrend. So that's just like a sort of slight variation on a way to like interpret the RSI. Because some people think that like as soon as you start going oversold, that's it, like it's over, which is definitely not the case. Like look how cooked this was. It was very hot. Yes, there was a dip, but by no means did it spell the end of this trend. This trend was still very much going up. So yes, there's a significant amount of bearish divergence because you've got a high here, and then you've got, you know, that corresponding to here on the chart. I'm gonna ignore this anomalous wick to the upside here. There's a lot of games happening in that section of the chart, but we're just looking at the natural, or as close to natural highs as you can. And you can see, you know, momentum built itself all the way up to that point, which is very much reflective on the price. Momentum built all the way up, quite natural, to a strong part in the uptrend. And this is where it peaked out, which pretty much corresponds with price on the chart. Remember, this is the hourly time frame, but this applies to every time frame. It's just you're going to get stronger, what do you call it, indication, I guess, for lack of a better word. The words just aren't coming today. Stronger indication, of direction on the hourly time frame as compared to, say, the 5 minute or the 1 minute. So from there, from that high, we're now given new highs, and we're all the way up here. We're way above that previous high. We're all the way up here. And look at the strength comparison to that previous high. It is at this point in time lower. I'm not saying that this can't continue to climb and like correct itself, but it is showing signs of RSI bearish divergence. So there is a divergence playing out at the moment, which means this push doesn't have the same magnitude as this initial push, which is surprising, right? I'm going to find the volume indicator and see if there's any hints to that as well. Like, is volume declining? It kind of is. Like, look at the highs here. See how they're sort of starting to slow down in the volume? Even the average, the volume average on the in white there is like pointing down. So this white line is like basically a volume average line. So that's kind of suggesting that it's heading this direction. You've got bearish divergence because of higher highs on price and lower highs on RSI. So that doesn't mean it's the total end of everything, I don't think. I think all that means is that this section of the move has been exhausted, most likely. So, like, you know, you could see some kind of a similar thing to this, like where it experienced a pullback. Don't ask me what that line is. I think it was where I was looking at it last night, perhaps. Let me just check. Oh no, that was this morning. It's currently 9:01 a.m. in Australia, so this was at 5 in the morning, 5:45. I was very much asleep in that part, but I was trading this. I was scalping it through here last night before bed, and I'm glad I wasn't in any like new positions here, because this pullback here was quite fast and violent. And if you were on leverage, that could have stung you pretty quick, pretty bad. Check out this. So there was that low there, right? And then you've got this pullback here, this low, and it's higher. That is a sign of strength. Like, if you can find like fairly major pivot points, you know, in relation to the time frame you're looking at. This is the 1 minute chart. But look, here's a pivot. That looks like it's a standout pivot there. So is this one. You could argue this one too. And then this area here was some kind of pivot. I just try to break it down into like sections, maybe some pivoting there. So this area here was a bit confusing because you actually got a break of structure to the downside with this low here. So that could have been a bit of a bear trap. Some might have seen that push lower to this as a sign to get out, you know, and rightly so. I mean, like in most cases, like you want to pay attention and respect, you know, breaks of structure like that. But it got back on track and it made a series of higher lows. So that was, you know, there has been a lot of evidence of confidence during this whole trend here. And, you know, as we're speaking right now, it's still trending. Sorry, let me just refresh. Okay. Let me turn on the Ishimoku system as well, for it to load up. It's still loading, geez. Putting it through its paces now. Yeah, here we go. Okay. I just want to take you back to a trade that I did before I turn this stream on, because I just wanted to talk about the setup and, you know, where I put the stop loss and why and all that. Basically using Ishimoku, like what gave me the confidence to get in and jump into the trade. So I opened the trade at, let me just, I may as well just bring my screen across. So this is my trading account at the moment. I've only got like $100 in there at the moment. And yeah, I'll just show you, it doesn't matter. So you can see $100 there. It shows positions. So this morning I was here, that's my buy. Kind of kicking myself because it's still strong and it's going up, but you can see where I sold as well. So here's my buy, here's my sell. And where was the buy? That was at 8:07 a.m. 8:07, let's mark that on the chart. 8:07 a.m. It was right here. And you can see I'm using the Bybit chart because I'm on Bybit, and it's the same pair, the perpetual contract for STMX. Okay, I'm going to lock that position in. Let me go full screen there. Now, where did I sell it? I sold it at 8:28. So it wasn't a very long trade time-wise. 8:28 is right there. So I sold into the strength, I guess. Just not for any reason other than I'm taking profit as profits there to be taken kind of thing. I felt good about it when I saw this happen a few candles later, like this pullback. But there are reasons, and I can show you why I could have stayed in it, and that's because of, you know, the Ishimoku lines here. I'll explain that. But anyway, let's go back to the entry. Sorry, I'm kind of getting sidetracked. So if I go replay, we want to see what signals I was looking at prior to my position opening. So like, let's go back to like, I don't know, here. Let's go to here. Okay, what's price doing and what are the clouds saying? The clouds are these like areas. There's green and then it's switching to red here. And I'm also paying attention to market structure. So my lows, or the lows of the chart. So there's a low there, there's a low here, there's a low here, and there's a low here. So everything's looking good so far in that regard. Now, as the chart progressed, I'm just going to click through it. I don't want to touch it. You know why? Because there's a red cloud there. I'm not interested in going long yet. I'm waiting for price, or first thing I want to see is a green cloud. So click, click, click. Always like be cautious of anything like that. See how we got a dip below the cloud? That's kind of suggesting, oh, this structure here could get broken soon. But there is still interest. There's still people, you know, buying it up. But, you know, we do get, there's another dip. That's kind of scary. Now, the thing that's giving me a little bit of confidence is that we're not getting lower than that previous extreme, which was roughly here. Right there. So clicking through, that was a scary candle. I was like, yeah, no, I'm going to let this, you know, my thought process here is that, okay, we're getting a cloud break to the downside. Maybe price wants to come in and get in contact with the 200 EMA. Yeah, it's the EMA. The 200 EMA. We're way above the VWAP. That's what this gold line is down here. So we know that. That's a given. We're above the VWAP. That's not really playing too much into the activity in the next 10 minutes. You know what I mean? Like that's all the way down there. No problem. I might even just hide that. We know we're way above the VWAP. So, and then there was that. There was like a bit of a recovery or like a buy back up. Now remember, I'm looking for a green cloud. I'm looking for it to twist back to green. There's my buy in the future. So you can see I'm waiting for that cloud to twist. And we get it. And look at the buying that's happening here too. These candles are getting pushed, like showing that there's a lot of buys coming in. Still a bit of like, you know, indecision as well. Like, so it gets bought up and then it gets sold. So people are panicking as they think that this is the start of some new downtrend because of these highs getting lower. But the thing you got to remember is if your lows are getting higher and your highs are getting lower, you're getting squeezed to a point. So you shouldn't be too spooked at this stage. Like it's just a squeeze. I would be more concerned about losing structure, losing the lows. That's when I know the game has changed. Like there's a shift. The game has shifted to like a downtrend. But anyway, we'll step through this. I see the cloud twist, so that's like the first thing that I'm looking for. And then I'm looking for price to make a clean break above the cloud. That's like my second confirmation to take a long position. So just waiting. Another dip, that was kind of concerning. Two red candles in a row. But we've recovered. We're still playing in the cloud. It's still very choppy, squeezing, right? I see the Kumo twist still, so I've still got confidence about the future. And then we get some candle closes above the cloud, which hasn't really happened at least at this height in some time. Like there's, you know, we haven't had that. So there's all this traffic through the cloud. And can you notice something else that's just happened on this candle? We got above the previous push high, just there. So we broke resistances. And this is where I was starting to get quite confident. Like this is like, okay, you know, there's some evidence building here. We're getting higher lows. We've just broken structure to the upside because there was this structure, this high. And bang, this one broke it to the upside. So that's kind of like your breakout. And then I wait for the pullback because usually when there's a push initially, not all the time, but sometimes, like a lot of the time, when there's a push, it gets recovered very quickly. Like it gets sold off. People don't believe in it. They think it's a fake out, or, you know, people are just have targets set above the previous high. They're worried about a swing failure, all that kind of shit. So next couple of candles. Now this candle was a nice dip and touch of what is called the TK, like the Tenkan-sen, which is the blue line, and the Kijun-sen, which is the pink line. And this thing bounced. I saw the momentum of this candle and I was like, that's it, I'm jumping in. I'm not gonna miss, you know, a retest of the TK zone. Or it's not really a zone, it's more of the TK line right here. So that was like, to me, that was enough confirmation. We had the lagging span, which is this fluoro green line, back up above the price. That's a good sign. That's bullish. We're above the 200 EMA. That's also bullish. That means you're in an uptrend still. And let's just click through, see what happens. So still higher than my entry was, wait, let me get the price for you. It wasn't the best, but it was in. I got in. Let's find it in here. Order history. Trade history. Anyway, it doesn't matter too much. Let me see if it's gonna show. Oh, okay, here we go. Entry 7640. So 7640. It was terrible. Look, it was all the way up here. This is where I got in. It was like a market open. It wasn't a limit open. I didn't have time to set limits or anything like that. Market opened, and then I exited at 7735, which was up up here. Let me just find that. There. Okay, there's 7735. So that's the entire journey of the position. Let me get rid of these drawings. Okay, let's get back to the narrative. So yeah, this retest here, you got cloud breakout. You know that the cloud's green ahead, so that's good. We can delete that. And price not only dipped below the cloud, but then reclaimed activity through the cloud and then broke out the top, which is a bullish sign as well. So green cloud, price breaking above the cloud, lagging span breaking above the price. And then we had this beautiful retest of the TK lines, mostly the conversion line, like the blue line. So that's a very bullish sign saying, okay, we've found support at a higher level than the previous low. You know, there's the previous low. This is now like a higher low. All right, that's enough of the setup. Let's just follow through with where it went. That was like, I'm just gonna get stopped out. I was kind of like, shit, I got faked out. But then if we click through, it got recovered. More dancing around. This, okay, that scared the shit out of me because I was thinking, yeah, it was just a fake out setup. I had to endure the drawdown for a couple of minutes there. Endure, yep, support again. See how they're just wicks. They're not bodies, they're not candle bodies, so kind of like taking a chance with holding that position open. Now in this scenario, if I enter there, like right here, if I'm entering right there, where should my stop loss be? I tend to put them below the previous swing low. So there was the previous swing low on this 1 minute time frame. Like this is how I see the chart, something like that. So I had it like roughly here, and this candle was like, oh, here we go. I'm gonna get stopped out. I'm gonna lose like, you know, $10 or something like that. Anyway, it held the cloud. Look at that cloud touch. Touched the cloud, launched off it, and I'm just gonna keep clicking through. Another retest of the TK line, support found. Look at that candle there. Look at that wick all the way to the top side. So I could have taken a little bit more profit, but it doesn't matter. And I'm just gonna zoom out and we'll just click through to like where we are now. So my trade's closed at this stage. I could have, now this is where I made the mistake of exiting too quickly because there was still evidence of price riding this blue line, which is the Tenkan-sen, or otherwise known as the conversion line. Is it conversion? No, it's called something else. Yeah, no, it is the conversion line. So if we keep clicking, there was a pretty nasty dip there. Remember, my stop loss is down here. I should have had no reason to panic. My break-even line's here. Like, this is where my entry was. I'll make that green. Stop loss down here, make that red. And there was a lot of evidence there to stay in the trade because look at the length of that wick. And then price is still like consolidating at this level as well. I'll keep clicking through though. But hey, you know, taking profit when you're in profit's not a bad thing. Like it's okay, you can do it. It's just, it's a bit of a pain to see it take off like this. Like it's kind of sucks. It's like I should have just held in, or at least left a runner, you know, selling half your position and letting the other half do, you know, this kind of thing. And here we are today, like here we are right now. We dipped crazy. I would have got stopped out if I left it. If I walked away and like, you know, went and had a shower or like went and made a coffee, I would have got stopped out. You know, my stop was down here. It came and it hunted out that low. Can you see that? This was the low we were dealing with. This was our structure. And look at that wick. Look at that stop hunt. And now it's taking off again. So it's like it came down just to shake out a whole bunch of people that didn't take profit in this rip. Anyway, there's a lot of games. Like it's not always, doesn't always play out like this, obviously. It's not always the same setup. You know, it just really depends on what the market decides to do. And that's the chance side of it. But at least with the Ishimoku thing, you can catch nice like cloud breakouts. Like see how price here, this was an even better one. This broke out, found support, broke out again, and just kept chugging higher and higher. But yeah, it was just a small trade. It only took, how many minutes was that? 21 minutes. Like just letting it play out. If you're brave, you can trade and you know you believe in the trend. You can buy when price gets back in touch and bounces off the 200. That's another like kind of cowboy trade. Because the reason it's risky is because you've broken below the cloud, and that can be suggestive of a change in trend entirely, like you know losing an uptrend. It's one of the first things to happen when you lose an uptrend is you get candles closing below the cloud. It's kind of scary. Like you're taking a real risk if you're going long below the cloud. But it was a nice dirty retest of that 200 EMA. I wouldn't mess with shorting it yet because it hasn't lost the 200. It's actually just shown a real big sign of strength by coming into contact and then bouncing off it like this. So I wouldn't write it off just yet. I'm not as bullish on it now that it's done this, like this huge pullback. Not as bullish. I'm a bit more like on the fence at the moment. I'm waiting for, what I can see is losing the 200 here. That's what I think might happen. So it's not about knowing what's going to happen. It's about seeing and waiting for the signals. Like you're waiting for signal. You're waiting for the candle to get structure, like closes below the 200. Then you know the party's over. You know this uptrend is taking a dip. But check this out. I mean, even that can be like misleading because look at this violent dip below the 200. You had all that. I betcha a whole bunch of bears came in and started shorting, like seeing the lower highs, you know, losing the 200, getting below the cloud. There's a lot of reasons to go short, you know, but ultimately those shorts would have been stopped out not too long after that because it rips back up. It reclaims the 200 EMA and trends back up again. So that's why I'm not totally... It looks kind of ugly at the moment, but it could just be like I said before, a stop hunt. So stopping out people that built positions through here, basically. Built long positions through here. This was a push to shake them out, basically. If they didn't take profit like I did, you know, anywhere through this structure. I don't know, do we want to do like a case study and follow this and see where it goes? Case study. I think we got half an hour left of the Saturday candle. This is like the back end of Saturday. Because I'm in Australia, I'm in Sunday morning already. I'm at like, it's 9:23 AM here. Which would be about 7:23 PM on the east coast of the US. All right, let me read some of these comments here. I never really understood RSI. I always like to think I understand things, but I always learn new things as well. New people's different yeah, different interpretations on tools and indicators, that kind of thing. Even the basic ones like the RSI, right? Last red cloud produced a rip though, right? Yeah, so this red cloud was deceptive because it's like, oh, we're going bearish, you know, prepare to go short. Same with this one. This was like a twist to the downside. So was this. This was very much, and you still could have caught a short here. When you dipped below the cloud here, you got rejected by it and it held you down. You could have definitely got bearish and shorted this part, this section. See, the reason I got out so soon is because this chart is very, you know, volatile. Like it seems to chop around a lot. Even after a big move, it'll swing back quite deep and then dance around a lot. So that's why I was a bit concerned. Like, as it came up here, I thought, oh yeah, there's every chance that it could do something like this, you know, and then come up. You know what I mean? You can get wiped out just in the volatility, like shaken out of your position. Even if you were correct in the overall direction, you could still get shook out. Still bouncing. It's fighting the cloud now, so the cloud, it'd be cool to see this twist back to green. So maybe that's what we'll look for. Price is above the 200 EMA right now. So we should be thinking bullish, but we need the setup. We can't just jump in because it's in an uptrend. We need the confirmation that it's going to actually maintain support and continue to build higher. Check out the amplitude of the wicks too. Like, look how tall these wicks are compared to these ones. See these ones? Tiny little baby wicks and candles. These ones are quite tall. So very choppy and indecisive. Kind of dangerous to jump into positions in that. You want to try your best to jump into positions or open positions when there's a squeeze. You know, I don't doubt that the Bollinger Bands were squeezing right here. Probably something like this. Like, I'm just sort of, you know, gauging what the bands might have looked like through here. Something like that. Like, you know, squeezing down into an apex. And then, you know, the breakout happens. So here we go. This is good. It's starting to try and build back up. We just want to see that cloud get twisted back to a green cloud before taking, let's do like a, what do you call it? We're approaching the daily close, so it might get very volatile, but we'll do a hypothetical trade just for fun. We want to see this bright green line pop up over the price. Let me turn that music down further. Maybe to there. Yeah, we want to see the green line, which is called the what is it called? The Chiku span. That makes it a bit harder to see, actually. Just seeing if that would make it easier for people to see exactly where price was, but we'll just go with candles. Anyway, like there is a lot of evidence to go short here as far as like Ishimoku goes. The thing that's concerning me is this 200 EMA. It's still holding the trend up. The trend is still up. We haven't lost that EMA just yet. You could do a risky trade as in like open a short here. And then like, you know, you're just anticipating losing the support and catching the profit. But I wouldn't keep it open too long because the whole, look how strong this trend has been and how long it's been trending up. Like basically going short in this area, like is sort of suggesting that you think you can pick the major pivot, like the swing. You're picking the swing point. You can do it, but it's not as easy. It's like a bit more of a gamble, I guess you could say. Here we go. A little bit of defense, price defense, people buying it up. You can see the lows. There's a low here, there's a low there, and there's a higher low here. So it's gradually trying to build. And we're talking extreme micro structure here. These are definitely not like, you know, these kind of pivots, like highs and lows, you know. This is just sub structure. This is just like it trying to get to a pivot point. This, and you know, hypothetically this would be more of a pivot point, a zigzag. So this is just like looking at candle after candle. Like, is it building a floor up? Like, is it staircasing? But I'm still not bullish on it just yet. I'm on the fence. The price is on the fence. Like, it's literally on the fence. It's tested the 200 twice here. Could it do some kind of inverse head and shoulders like this? Maybe. And this is why it's good. Like, this is a really good example of why you should wait for a fresh setup. So this, where I got in here, that was kind of fresh. It was, you know, price was teasing, dancing through the cloud, and then made evidence that it left the cloud to the top side. So that's fresh. I got in fresh as possible, as I could manage, with enough supporting evidence to go long. So fresh trend. Now, people that entered up here, that is stale. That is extremely stale. It's not saying that you can't catch some further moves, but it's just riskier. You know, you're not guaranteed another, you know, 12 stairs to your staircase here. There's no guarantee of that. And there's just no support like up there, like especially like from the Ishimoku indicator. Like there's no rhyme or reason to take a fresh long position when everything's so elevated. Static, what's happening? Super chat, AMC, Link, Uni. Thank you. Oh, look at this candle coming down, testing that 200 again. Thank you, Static, for the $2. Legend. If anyone wants to jump into the Discord chat, I'm sitting in there right now. Like there's a YouTube voice channel. I'm in there. Jump in if you want. Even if you want to share some information, you know, this is just, I'm just winging it. It's just a chill stream. Oh, look at that Bitcoin candle. Boom. They want to round out Saturday with a bit of a bloodbath, it seems, on the short time frame. Go down to the 1 minute. Ooh. Yeah, that doesn't look too healthy, does it? Or maybe that's what they want us to think, that it's not healthy. But this repeated, you know, price visiting these lows here repeatedly now, and a lot sooner. Like, you know, you've got, it's just bashing off support. It's like, is it gonna hold? It's even happening on the higher time frame. Like you've got on the hourly chart, I've zoomed out a lot. It's probably on the daily too, but you've got bang, support. It's really depending on that support holding at the moment, Bitcoin. So are we finally gonna leave this freaking 1 month range that we've been stuck in? It could be a bear trap, 100%. You know, if we get something like this, like some nasty, like hourly, like candles that come down, they could get recovered very violent, definitely. You know, we've seen a lot of that. Kind of happened here. Look at that deep push below these lows. you know, everyone would have been freaking out when price got below these points here. And then look what happened later. Bang, huge rip to the upside. You know, new highs for the year, that kind of thing. So it's very choppy. It's not easy at the moment to read. Bitcoin's not easy. It's just range bound. This is the kind of shit we want to see on Bitcoin. Lows, volatility to the upside, new higher low, volatility to the upside, consolidation at a higher level, volatility to the upside, higher low, bang, huge breakout. Like, that's a trend. Nothing in here is a trend. It's all false starts, false dumps, false starts, false dumps. It's just disgusting. Like, you don't, that's not trending at all. Here's a smaller trend here, you know, move, consolidation, move, consolidation, move. Like, that's what you want. You want a nice, you want a combination. You don't want a move, then a consolidation, then a drop, and then a move, and then a consolidation, then a drop. It just, yeah, it's disgusting. I don't like it. I don't like to participate in a market that's doing that. I'm not good at it. Some people actually are, you know, they excel in this kind of environment, like where there's a lot of indecision. You know, they determine where their range is, and you can see I've tried to do that. I've tried to establish that this is the buy zone and that that's the sell zone up here, something like that, and that you should be building longs in the buy zone and then distributing them up in the sell zone with a stop loss, like a reasonable stop loss below the zone, you know, somewhere responsible, to which you run the risk of getting stop hunted, which happens a lot in Bitcoin. Static's got some information here. Thanks again for the $2 super chat there, Static. Don't be fooled. BTC bear trap. Yep. Bullish divergence monthly on Uni and Link. I'm going to check out Link. Look at this. This is getting very noisy and messy. There's a bit of evidence that this is going to see some drawdown soon. It's really depending on that 200 holding, that 200 EMA. And you know, these lows here, they have to hold. Bit of a, can you see like that slight push lower beyond it? That's your classic swing failure move, like where the market pushes it just enough to freak people the fuck out and then totally recovers it. Still at 24 minutes until the daily. Bitcoin's spooking everybody at the moment. Maybe an incredible time to buy. You never know. Every time it's done these big spook moves to the downside, there can be some good entries. Like, it's risky, but check it out. Like, it rips back up, recovers the move down. There's a very big chance this is a big push for liquidity. Like, they're grabbing a bunch of long liquidity, and then once they're happy with liquidating a bunch of longs, they're gonna recover it back up and take out the people that got ultra bearish from this dip and opened really late short positions. You know, rip it back up and stop them out too, you know? I mean, it did it here. Look at this ugly up and then down. Look at this, like, action here. This is all very, like, choppy and just wiping people out. Look at how ugly this is here. Damn. And even on a higher time frame, let's go to the 4 hour. Look at this beautiful break we had not long ago above 30,000. It came all the way up to like 30,400 even. Getting above like a lot of these candles highs, you know, coming up and testing the top of this. But ultimately, bang, real savage drop after that. So I feel sorry for the people that took that as confirmation of reclaiming the support. This is why it's been very tricky to trade in this range. I think it can be easier, and it will get easier. It's just we're at this, guys. If I go to the weekly, we're still at this support resistance zone. This 30 to 28 to $32,000 bubble or cloud of support resistance. That's what we're in right now. So it's not the best trading zone, not the best sort of time to be like expecting, decisive trend just yet. When we get a clear break of this area, this zone, then we'll know, and everything's should get a lot easier with trades and sentiment. But as you know, we are coming up on the next Fed funds rate. If I go to crypto here and calendar. All right, so we've even got our GDP forecast of 1.7%. GDP. That's positive, right? That eliminates the recession warning that people are putting out there. 1.7% GDP would be a decent result. It's actually down off the final of Q1. Final GDP for Q1 was 2%. This is the advanced GDP reading for Q2, so it's just an early reading. That won't finalize for a couple of months yet. So we don't know like where we stand off the Q1 2% GDP. But 1.7, although it's lower, it's still a positive figure, which means it eliminates the possibility of a recession within the next quarter, the next, Not saying a recession can't still happen, but you need two quarters of negative GDP. If you look at the history here, there was 2022. We basically, technically, we're in a recession because two negative quarters. Sorry, my cat is meowing. Can you hear her? Come on. Come on. See if you can see her. Cherry. 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 Come on, Cherry. Cherry. Come on. She's gonna tease. She's gonna do roly-polies. Come on. Cherry. Cherry. She was yelling down the stairs, yelling at me. She just wants to sit in, just out of reach, like a lot of cats. Anyway, where was I? Look at that. That's when COVID, that crazy COVID dip we had? Look at that negative GDP. Down 32.9%. That's because the world stopped. Everything stopped, transportation, exports, everything. A lot of things just shut down. And then the spring back was incredible, 33.1%. When everyone sort of came out of their hidey holes, GDP shot up all of a sudden. That's crazy. Insane. Dip and then rip and then rip and then dip. I'm gonna look at this. Static's asking me to have a look at the bullish divergence on the monthly for uni and Link. Okay. I'm going to grab my altcoin window, duplicate this and just find it. Might have to go to like a big list. Maybe Bybit has it. Just arrange it alphabetically. So Link, let's have a look at, actually, what did you say first? Uni? Okay, Uniswap. LMNOPQRSTU. Uni, there it is. Uni. Okay, and then you're saying monthly? And you're talking about divergence? Okay. Let me open up my oscillators. I probably need like a longer... longer history. So monthly? What's up, Coley? Just trying to find this divergence. Okay, so I think I can see what you mean. So we've got higher lows on price on the monthly, but then the RSI is suggesting lower lows at those same points. So like here to there. Yeah, I see that. Definitely. It's to the front. Yeah. No, I see that. Unilink or Uniswap, whatever the hell. Hey, what's happening?
It's on the MEXC monthly.
Oh, MACD? Okay. Yeah, my chart doesn't have enough candles to see monthly MACD. What exchange are you looking at that on for Uniswap?
Try Uni Binance.
Oh, but yeah, I'm on the Uni Tether Binance.
Type in Uni and BUSD.
Oh, BUSD. Okay.
UNI BUSD.
Yep. Binance US dollar. Okay. This might have
Monthly.
You sure it was the monthly? Not the, say, like the weekly or...
Yeah, monthly. I'll send you a pic if you want.
Yeah.
Check out the other one.
Yep. The other one was
Chainlink.
LINK.
Link US.
Cool. And you're seeing monthly MACD bullish divergence. Is it based off the histogram bars or?
Oh yeah, definitely the histograms.
Yeah.
Not the oscillators, the histograms.
Yeah, because the histogram's definitely getting shorter and shorter and shorter. It's about to do like a twist to it to get some green histogram bars.
Histograms have been getting shorter for a year.
Yeah, they have.
Price
it's really
down.
Yeah. It's very suggestive of approaching like a MACD cross to the upside. Definitely, like in the coming couple of months, or even starting next month.
Well, look at monthly Chainlink, right, on that oscillator versus price action.
Yes.
Take a picture of that, and you're going to look at Bitcoin Cash on the same time frame with the same oscillators.
Bitcoin Cash. Yeah, is that BCH?
BCH.
Yeah. BCH.
It looks just like Chainlink.
It does, yeah. And BCH already made the move. It like shot up out of nowhere. Yeah, I see that. That's cool. Yeah, that was an incredible candle too. 168%. So there you go, guys. That's potential tip off from Static saying Uniswap and Chainlink have some decent monthly evidence on the MACD of like a potential rally.
And then
Like,
last thing to share is nothing on the charts, but if you're not, Rick, you've been following this AMC thing?
no, I haven't. I haven't looked at AMC in a long time. I've got a chart for it though. I can
Do you
bring it
remember
up.
AMC
Oh
coming up with this
yeah.
bullshit ape stuff? Ape that they just kind of
A
threw on everybody?
oh, vaguely, yeah, yeah. Is that another sort of
Lawsuit.
MACD? Oh yeah,
I
I
don't know
can
about
see.
you, but I got a postcard in the mail a few months ago from a lawyer about a class action lawsuit.
My God.
Long story short, a judge today in Delaware, Friday rather, how do I explain this the quickest way possible? Basically went against what everybody shorting AMC thought would happen, and the opposite happened. So basically, everybody who's been spending 1,000% in fees to short AMC was wrong. AMC shot up. If you look at aftermarket trading, AMC shot up from $4 to about $9,
Oh my
where it
God.
retraced to 7. So the
Like
short squeeze.
just
The short
recently.
squeeze that kind of the short squeeze that kind of introduced a lot of people into markets 2 years ago, 3 years ago.
Yeah, I see that, bro. I see it. Holy
Really
shit.
strong potential of There's a
That's
very strong potential
crazy.
of going and doing the exact same thing all over again,
Right.
only much higher. It's like the mother of all
Yeah.
short squeezes.
That is insane. Yeah, because you know, obviously you don't see it in the regular trading hours, but you have to turn on extended to see just what happened in
Correct.
aftermarket. That is crazy.
So people have been borrowing shares, synthetic shares of AMC at
Yeah.
1,000% fees, so confident that AMC is going out of business.
Oh my God.
And then this judge
And then
ruling in Delaware changed everything.
yes, news-based price action. Yeah, I like it. Reminds me of XRP, SEC versus Ripple, and XRP just shoots up as soon as everyone thinks they've got the. Well, I mean, the evidence is the judge ruled in favor of Ripple, so that's cool. But they're appealing, right? The SEC still going through the process of appeal, right? Appealing the ruling or
Yeah,
something.
don't listen to Clive. I've been reading the general.
Oh, in general in Discord.
I don't know. I think the SEC is going to start acquiescing to BlackRock. So I'm not. I
Yeah.
believe it was Clive, general in B's chat that said
Oh,
that the SEC is going to appeal and win, but I think they're just going to kind of move on with life with the XRP thing. I think they'll
yeah.
approve the Bitcoin ETF, and I think the rest is history. They'll leave everybody else to their own devices. They'll let the
Right.
pussy coins and the stupid bullshit coins like baby Doge and all that. They'll let them just blow up.
Oh, yeah. I want to like remind everyone about Bitcoin's history, like the journey it's been on, like what it is. It's unlike any asset I feel that has ever existed before, right? No, there's no company behind it. There's not like, you know, we're not counting on the performance of a group of people to keep it, you know, afloat and progressing. It's an algorithm. It's a freaking maths equation. Like that's you boil it down, that's what Bitcoin is. It's mathematics. It's like it's got this built-in inherent function to get more difficult to produce. So mine, because that's how Bitcoin's produced, right? It's mined through people running, you know, like a mining rig, for example, and solving the what is it like? Just it's some algorithm. You have to solve the equation to verify a transaction that has taken place on the blockchain, and they get rewarded for doing that in Bitcoin, and that's how new Bitcoin's formed, right? So if that's happening, and the reward being paid out in Bitcoin is getting smaller over time, at each halving, you get half the reward. That's making it scarcer. Like inherently. It's got a roadmap of scarcity in front of it. That's how it's functioned since it began. And what has that done to Bitcoin over time? Like, I think everyone knows the answer to that. It's moved it in a direction right and up over time. Let's go to the weekly. I don't know. I just feel like there's a lot of people that don't understand the mechanics of Bitcoin still. Like they haven't got a grasp on what it is and how it functions. Like, yeah, we can see bear markets and bull cycles and all that, but look at the overall picture. And like, check it out. Yep, there's definitely a slowing of momentum. You know, there was a lot of hype in these runs here. But ever since then, it's been like, okay, we're sort of getting like diminishing returns because we're up so high, right? Price is real high, market cap's huge. To move Bitcoin to this degree on a, you know, performance scale, you have to bring in trillions now, like, to Bitcoin. Because I think it hit $1 trillion at the all-time high market cap. But anyway, there are, like, what are the pathways to Bitcoin going back below $1,000 or, you know, stuff like that. You just have to think about what real world scenario would cause something like this, you know, like on Bitcoin. Maybe like a mass worldwide ban of Bitcoin, maybe something like that. It could happen. I mean, I'm not saying it can't happen. I'm just saying is that going to happen? Like, is that likely to happen? Are they going to ban it worldwide, every country? See, if America totally bows out of crypto, that's not the end of crypto. Like, it's devastating, sure, but like, and it's probably going to like reset a whole bunch of, you know, support levels and, you know, market cap and all that, all the rest of it. But as long as it exists in a number of other countries, like, it'll still be around. It'll still be able to be bought and sold. America, the SEC doesn't have total global control over what happens with crypto, even though it seems they do because they're very influential. But yeah, I don't know. I just think it's kind of risky to call the end of Bitcoin. People have been trying to call the end of Bitcoin since it started, and they've been wrong every single time. So, you know, you have to ask yourself, am I cocky enough to think that I know the end, like where the end is, when everyone before me that's called the end has got it wrong? You know, are you going to take that? Are you going to take that call? You're going to make that call, especially when there's even government agencies. There's like, you know, BlackRock pushing for an ETF in Bitcoin. Like, do you think they would do that? Like, one of the most successful investment firms on the planet. Why the hell would they start getting involved in something that's going to collapse in the next 10 years, you know, or 5 years or 3 years, you know? Why are they putting so much effort to push for an ETF in Bitcoin? Like, what do they know? Like, what future do they see? The American government holds a substantial amount of Bitcoin. Something that's, like, you know, at this point in time, extremely valuable, right? With prospects of big gains in the future. If not, you know, big gains, at least coming back and testing the highs of 2021, 2020, you know? But yeah, I don't know, just do a bit of research on it. I think you need to do more research if you don't understand the mechanics of how Bitcoin works and why it has a bullish prospect. You know, do yourself a favor, look at it. And like, is the stock market suggesting like immediate collapse or like a big tragedy at the moment? Some people still think yes. Some people still think that we're gonna go into like new depths that we haven't had since COVID, that kind of thing. Where's my other list? Let me just have a look at the SPY. Let's spy the SPY on like the daily time frame and zoom out. So check out, there's the all-time high. There's the dip of last year's bear market. There is so much technical and structural indication that we are out of that bear market. We have a giant falling wedge. We broke out of it. We actually back tested the top of the wedge, found support, and launched off it. We've got a series of higher lows. Boiling this down, like if we were to take a smaller time frame approach to this, to me, this part here, which obviously comes from, you know, we know that the history of the S&P comes from all the way back down here. Through the 90s, it was on a tear. Like the whole thing's been like a massive bull trend, right? So if we take that and like, let's zoom in on a part of the S&P and just suggest, you know, okay, look here. Let's pretend this is the chart that we have at the moment. And we've got, this is our all-time high, S&P 500 up here. We've just gone through our 2022 bear market, right? And then now we've bounced and we're in this sort of like recovery, right? We're like, shit, are we gonna make it? Are we gonna come up and test that all-time high again? You know, there's a bit of a fade there. Boom, look at that. Like this is what an uptrend does, like as a, you know, structurally speaking. Yes, there's pullbacks, there's shakeouts along the way, but overall, like the larger picture, you've got to zoom out and just see the larger picture at play, you know. You know, we're all concerned about this 12 months of pullback, right? Like we think it's the end of the party, like it's the end of America. Like if I zoom out, the S&P 500 is America. That is 500 of the biggest countries in America on an index. Let's go out to the weekly. You can see along the way, there's obviously drawdowns, but economies recover, countries recover out of these times, right? I mean, what's the trend? The trend is up. What happens in any kind of economic drawdown or bear market or recession? The goal is to recover off it. Do they have the tools to recover the market? Yes. They've done it time and time again. Major drawdowns, major pullbacks. They have tools in place to prop it all up again. Like, are they just not going to do that? Like, is that what's going to happen? Because that's what has to happen. If we just keep falling and falling and go into like new depths, it means that they failed and that the economy's gone back into the toilet. Nothing on the chart, nothing in the interest rates or the inflation rate is suggesting that we're going to turn around all of a sudden and crash. But you know, like who knows? Who fucking knows? That's why it's not easy, because it's like, you know, the global financial crisis type thing can happen again, right? Things can start breaking and cause a domino effect. Everyone wants to be the next Michael Burry and say, oh, called the top, called it. You know, they're going to make a movie after me because I was bearish and the market crashed. I don't know, like how many times has an almost complete recovery of a bear market completely failed and made a new low in the S&P 500? Has that ever really happened? Just before COVID was an all-time high at the time. The S&P 500 had never been that high. Bang, COVID happened. Huge spring off the back of it. It was a very unprecedented kind of I mean, not. I mean, it's happened before. Like we've had crashes and recoveries, like violent recoveries. But yeah, like I don't know. Just I don't feel like that we're gonna get that out of a recovery. Like, look at, okay, this is a major dip. Let's just highlight all of the major dips. There's a dip. Here's the GFC, the global financial crisis, one of the, you know, one of the biggest disasters economically in modern history, right? There's the 2000 tech bubble crash. That was big as well. But can you see a pattern of recovery after these events? Yeah, I can. I can see a pattern of recovery, complete recovery. Now, on the journey of that initial recovery, see, this is interesting because you've got a high from 2000 and then you take it over to the high just before the GFC and it's a double top. So you had a crash and a recovery. It double topped. Could that happen here? Oh, totally. Did it actually make a new low during the GFC? Yeah, it did. It wicked down. It actually swing failed below this low here. Imagine how terrifying that would have been at the time for investors. Like, you know, we just made a new low. Shit, this could be like a giant mother of all downtrends. But no, it didn't. It picked back up. It bounced. It found a floor. They fix things, right? The Fed, they have measures in place. I mean, the whole recovery off the GFC, no doubt, has put us in America into giant debt, like record spiraling debt. You know, to prop everything back up, to keep the country on its feet. It's probably more complex than that, I know, but that's like the layman's basics of it. That's like the core of what's going on here is that to keep the game going, they have to do things, otherwise the country collapses, economically speaking. And you don't want that. You don't want that. Like for such a massive economy like America, that would just, it wouldn't just be bad for America, it'd be bad for the whole planet, really. Like, I think a lot of things would change. A lot. You'd have a new superpower. Russia and China would be like, yeah, they would be the new like global leaders determining what happens economically, and it would just be, it's unknown territory for us in this modern era. We don't know what a world like that would be, you know. I think, yeah, society and like the countries around the world, they're kind of like in this lock, like it's like a game of chess, and they're all like, you know, they're all locked in you know, 2 steps forward, 2 steps back, 1 step forward, 1 step back. Like there's this tug of war of power, like this power struggle constantly. Anyway, that's markets. That's the macro look. I don't think it's the end of the world. Just because of a bear market last year. I know it's a lot of people's first cycle and they haven't really got much experience looking at markets. But we've got information, lots of information. Let's go on to the Dow, the DJI, the Dow Jones. Where is it? I don't think it's in this list. I think it's in this one. Okay. Now the Dow Jones, there should be like over 100 years of data on the Dow Jones chart to go off. If it'll load in, here we go. I don't know why it's running so slow, sorry about that. See, we have to go back out onto the monthly chart to sort of see. There we go. There's the beginning of the data. 1896. This is a direct reflection of the growth of America, the Dow Jones Industrial Average Index. Let's go logarithmic and just see its path and its trajectory. So basically, along this journey, you can call highs and where we're due for a pullback because of something happening. This was the Great Depression right here. Bang. Did that ruin America for good? No, America got back up. It took time, but it got back up on its feet and it, continued to grow as a country, an economy. Economies come and go, yeah, in history. We've seen the Roman Empire came and went. The Ottoman Empire came and went. Things change, countries change, technology changes, governments, all sorts of things change. But this is basically the life of America since the late 1800s. It's a road, it's a history, it's a timeline of history of the economy. It's a decent reflection. The Dow Jones is like a pretty good index to track over time because it's got the most data. It's 30 select companies at the time. I don't claim to know what qualifies a company to get into the Dow Jones index, because there's some, it's not just the top 30. It's nothing like that. It's a select a select group. Let me look it up. What qualifies a company to be included on the Dow Jones index? The DGIA was created by Charles Dow in 1896 and has been published continuously since then. In order to be included in the DJIA, a company must meet certain criteria, such as being headquartered in the United States, being listed on the New York Stock Exchange, and having a minimum market capitalization. So it's basically like the big market caps that are listed on the NASDAQ in this group of 30. So I guess if your market cap drops below a threshold, you get excluded from the Dow Jones. So maybe companies come in and out of it. But, Apple and Microsoft are definitely in it. They're a big part of the Dow Jones at the moment. Biggest companies in America. But yeah, even the COVID drop. Okay, wait, this was the GFC right here. This drop here. That's the GFC. This is the COVID dip. You can barely see it in the journey of America. It literally is, no joke, up only. If you're looking at this trend, it has only gone up since the beginning of the Dow Jones. Pick the major pivots. There, maybe here, there. Okay, maybe something there's a lot of pivoting here. And now we're up here. The end of America would look like something like this. Let me borrow some of these pivots. Something like this. All of a sudden, the biggest companies in the world are failing. They're losing stock price. Things are crashing to record pullbacks not seen since the Great Depression, to a degree, you know what I mean? For what reason? What's the scenario of that? I just don't understand. These people think that the stock market's gonna dump into oblivion. It really is up only. There's no joke about that. It has gone up only since the beginning of the Dow Jones. You know, over a lifetime of data there. I don't think anyone's still alive that was born in 1897, 1896. Anyway, I think it's a safer bet to trade into the health of the United States as a country and an economy than to bet against it and think that you know where the ultimate top is, and you know, basically the end of America and their power, and you know, all of the companies in America, which are international as well, by the way. Huge impact. Apple is very much has a grip on the planet with smartphones, Apple iPhones, right? Microsoft, so many PCs run Microsoft as an operating system. Is that all just gonna get cancelled tomorrow? Like, nah. They've got so much going for them. America has a very strong economy. The labor market at the moment is like incredibly strong in the face of extremely high interest rates. Like, you know, businesses should be feeling a lot of pain right now, but they're not. People are employed. Unemployment figures are low. They're coming in lower than forecast each time. Okay, where's unemployment? Where's the most recent like unemployment claims? Okay, the forecast was that 239,000 people were going to be claiming unemployment. It came in lower. It came in 228,000 people were claiming unemployment. That means more people are working now at the moment than expected. Unemployment claims. So the labor market's strong. We know that. That should be causing inflationary pressure. And is it? Is the inflation chart suggesting that? Where's the inflation chart? Right here. Let's turn logarithmic off for a start. Okay, here's inflation. Did we go through a real tough time because of COVID and the fact that the government had to print like crazy to get us out of trouble? Yeah, it caused massive inflation. Huge supply shock. Think of the supply chains that got shut down and couldn't meet demand. Demand was there. Everyone was cashed up with the stimulus, and yeah, it was a very strange time. It caused this massive, like, ramping inflation, which had to be aggressively met by interest rates going up to 5.25% to bring it back under control. And that's the path it's currently on. That's what it's achieved since the high. The Fed have said their goal, and they've said it repeatedly, is 2% headline inflation. That is this line right here. So interest rates, where are they at? They're at highs not seen since the global financial crisis. Like right here. That's the level we're at right now with interest rates. 5.25%. With the prospect of the next Fed funds rate going to 5.5%, which is the highest it's been since 2001. You know, and I guess the fear, like, there's a healthy amount of fear of people saying, like, things break in high interest rate environments. Like, it was a contributing factor. Like, it wasn't the reason the GFC happened, but it was a contributing factor to pushing things over the edge. I mean, the subprime mortgages was the biggest problem. But yeah, high interest rates certainly didn't. They exposed the problem, kind of thing. Put it that way. Just like the high interest rate environment of last year, this year, exposed the problem of the small banks that were heavily, you know, investing into risky assets, that kind of thing. Silicon Valley Bank, SVB, had to be bought out by a bigger bank. They collapsed. There's no more SVB. Doesn't exist. So that is like kind of like a little canary in the coal mine, maybe, like that things are starting to break, like. But yeah, damn, a housing tragedy, like crisis thing, causing the GFC. Damn, is there any big industry or sector that's gonna undergo that? Like, what's housing looking like right now? What's energy looking like? What's retail, like goods and services? Like, these are all the big sectors in the economy. The GFC was mostly caused by real estate, houses, subprime mortgages, like, financial services, like loaning out to anybody, like loaning, giving money to people that don't have jobs to buy a house. Stuff like that was going on prior to the GFC. And I don't know, is there some kind of big risky activity in America that's happening right now that could threaten another financial crisis and collapse? By the way, we lost that 200 and we're trending down on STMX. There you go. Evidence, there's a high there, there's a lower high here. Big fat red cloud, too resistant. There was a bit of a brief fling of optimism, like with this push here and that. But it failed. It got a lower high. I wouldn't be looking for longs on this. It's very risky. If not, probably would have gone short on the break of that 200. And then this candle's a big tell right here. This big long candle. But then again, yeah, that was the daily. That was the 10 o'clock. That was the close of the Saturday candle. Caused a lot of volatility initially, and now it's like it's pulled back. It's down 4%. I don't know. Like, I'm not saying it can't like pick back up and continue traveling upward, but it doesn't look good on the minute chart. 5 minute, different story. 15 minute, different story again. Like, it's probably like insanely bullish still. It's still in an uptrend. It's just you're enduring a pullback. So yeah, just be careful trading leverage on things like this that have already done like a big bulk of a move, especially on a time frame like the 15-minute chart. Had like a cloud breakout to the upside. You're in like very dangerous territory up here. Like, if you're going long at the top like this, you've got so much room to pull back to, and you'll get wiped out. So be careful. Yeah, tough one. Trade setups, guys. Find a system. Ishimoku's good. Look for a setup. Look for supports and structure, and play into that. Play into those signals on the indicators, and try not to FOMO. FOMO's bad. And try not to get overconfident with leverage as well. That's a killer. And also, no stop losses. Trading without a stop loss is going to wreck you. Over trading, taking like more than 5 trades a day, is recipe for disaster, I think. Unless you've got like 3 or 4 years experience, or like a lot of like recent experience, and your chops are up with trading, I wouldn't be taking more than 3 to 5 trades a day, to be honest. Like, you just want to be sensible. You want to build up your skills as a trader, as an analyst, to find the entries and protect what you have. Like, don't lose money. That's the first goal. First goal, don't lose what you have. Second goal, be disciplined and follow a system. That's the second goal. And then third goal, yeah, make money, obviously. But, checkpoint 1 and 2 is definitely very important. You got to protect what you have, or you've got nothing to play with. And if you suck at it, if you suck at trading and technical analysis altogether, consider investing, honestly. Like, do research into something that has like a bright future, or some kind of like anticipated future. Like for me, Bitcoin has. It's not financial advice, but I think Bitcoin has some kind of future in the next 5 to 10 minutes, right? 5 to 10 minutes, 5 to 10 years. And then probably further into the future, like who knows? Like 10 years is a long time at the moment. You know what? 10 years wasn't a long time for change. Back in like the 1700s, things took a long time to change back then. But now in the modern era, things are changing like almost year to year. Like the game's changing all the time. So much is changing. So who knows what things are going to look like in 10 years? Hopefully good. Hopefully we're heading in the right direction as a species on this planet. What's up, Alchemist? I'm short on USA until late 2024. Long on military industrial complex until same. Rick casually illustrates the demise of America. I've been in and out and missed most of the stream. Did you look at Doge yet? Ways value European. Yeah, I'll have a look at Doge, man. I don't think a hell of a lot. There hasn't really been much drama with Dogecoin. It's still like around 7 cents. Let's go to the daily. Let me just get a raw chart. There's some of my like larger time frame TA sitting there on Doge. Can you see we're still in this like general level, this general box? Arguably, we're stuck in the lower quadrants of this like flat consolidation. I'm not bearish on Doge long term, but yeah, it hasn't done anything yet, man. It's trying to establish like, okay, let's look at like just the last week or two. It's had some uptrend. There's no doubt about that. There's been an uptrend going on since late June. Like since this big drop, there's been a series of higher lows, higher lows, higher lows. You know, that's a good sign. Like it is moving in the right direction if you're an investor. But then, you know, is it doing something like this? Is it following like a rising wedge? Is it doing like this kind of thing? You know, it kind of is. It's kind of scary like that. Could you see another leg down to the, you know, to this kind of region here? Yeah, you probably could. It's not out of the question. Like, you know, if you lose this wedge, it could possibly dip back in. But just keep an eye on it. Keep an eye on the previous low. Like, the structure is your friend until it gets broken, you know? So the lowest swing, like the lowest low we've had recently is this one. I mean, sorry, the most recent low is this one. The lowest low is this one, obviously, that we've had recently. But, I mean, check out that low. It's all the way up here. That's where I would have a support line. And you want to maintain this trend line as well. This is a trend line of this rising wedge. It'd be cool to see another leg in the wedge. So that means coming here and then like say leg would chop around here and get in contact with the bottom of the wedge over here, and then seeing another, you know, leg up to the top of the wedge. That would be cool. But don't count on it. That's the thing. You have to get confirmation of support before you can consider that it's going to do that. The pattern suggests that it will. Like that's what's been happening. It's been bouncing its way up like this, right? That's the combination. But that's the thing. The other thing to just remember is that when patterns like this happen, they do break at some point. It's gonna break either, you know, hopefully to the upside. That would be cool, but a lot of the time, rising wedges do break to the downside. So just be aware of that. From an oscillator perspective, let's check that out on like higher time frames, because lower time frames for oscillators is it doesn't mean a whole lot for the next, you know, for looking at outlook and trajectory, for getting some kind of idea on where things might head in the next couple of weeks. Like you need to go to the higher time frames to see where the momentum is going. So look at this RSI. It's gone from like uptrendiness, like when Elon Musk. Wait, where's the Elon Musk pump? Back here. Here we go. So it went from this rapid uptrend, and it's just been getting diminishing performance since then. Like it's just kind of slumped down back into this range of support. But overall, I think we have to go even further out. Let's go to the weekly or like the monthly. Not enough data on this chart for the monthly. Weekly is kind of the best we can do at the moment. I'm just going to hide the drawings, not the indicators, just the drawings. We're on the weekly. The stochastic, so stochastically speaking, we've bottomed out on the stochastic and we're heading back up. So there's potential ahead of us on Dogecoin to come up at least to here, right? How does that look on the chart? Maybe that means like another push to like the mid-teens, like 15 or something like that. That's totally possible. Totally. A lot of it's riding on Bitcoin as well. Bitcoin needs to show signs of strength to bring the altcoin market and open the door for the altcoins to actually progress. Dogecoin has had a rough year, really, when you think about it. It hasn't done anything. There's smaller moves, yes, but there's no trend. There's no bull trend for 2023 on Dogecoin at all. It's been messing around on the floor. Kind of disappointing for like all the Doge army out there, you know, like there's been no love. Delete that line. It's annoying. But then in saying that, maybe it's doing like an XRP. Like if I open up the XRP chart, this is the weekly chart. Let me hide the drawings again. XRP, similar story. Like it went through all of this flat, like nothing's happening. The SEC case is still on, and then bang, you get this breakout of the range. That's what we're kind of hoping Dogecoin will see, something like that, because it's got its range and we're waiting for this bust out candle, just like back here. And I think in, you know, given time and given the right environment, like Bitcoin breaking through 32,000, going higher, that would be the recipe you need for Dogecoin to get up, because the sentiment just ain't there yet. Bitcoin's at resistance as we speak, and it's battling, it's fighting pretty hard. It's on the weaker side of that test. It hasn't proven itself just yet. It needs to really break through 32 and get, you know, action and candle closes above 32,000 to get bullish again, to get, you know, like really optimistic. But yeah, I mean, we could have seen the high for the year, like on Bitcoin. It's quite possible, right? We're waiting for evidence. That's what you need evidence. You need to go off something. You can't just like make a blind prediction with no reason or rationality. Like, what's the rationality of anything happening? Like, you need something. You need something to go off. Pin the tail on the donkey, TA. Anyway, yeah, Doge, I wish it well. I think long term, like macro, you know, as an investment play, it has proven that it can cut ground above 50 cents. You know, there's action up there. It's done it before. Can it do it again? That's the big question. Can it even come up to 20 cents? Yeah, there's no reason why it can't do that in a bull market. Like when things are pushing all-time highs again, I bet you Doge is going to be around there to capture some of that. There's no doubt. I'm quite confident. It's just this is very much a game of endurance with Dogecoin. Doge ain't gonna see any love until Bitcoin's smashing toward its all-time high, or post-halving even, maybe. Like, that's how long it might take Doge. It might take Doge like another 9 months before it actually breaks out of this trend of like just chopping around down the bottom here, like down at 5, 7, 6 cents. But yeah, that's my outlook for Doge. Hope that helps you. All right. I think I'm going to wrap this one up. We've had a look at XRP, Doge. XRP is kind of losing that optimism, isn't it? A bit. It seems like it. There seems to be a range between these lines here. It's approaching that. This would be a big test. If we get anywhere near that, that's going to be kind of scary. It's like, is it going to hold? And if you get evidence of it holding, then yeah, look, there's a nice distance there between the bottom and the top side. Like, that's 26% from bottom to top of that, seemingly that range, right? So that's cool. All right, guys, that's all I'm good for today. Love you all. Thank you for checking in and all the support and the likes. Appreciate it, and all the best in your trades. And have a good night. Have a good day wherever you are, and I'll see you in the next one.